don't recognize these shapes, uppercase B, lowercase b, uppercase B, and D. Anybody unfamiliar with these? Okay. Don't be shy, guys. Okay, so got a couple of people. All right, so a B-shaped profile, a P-shaped profile denotes a profile where the majority of the volume traded is in the upper third, giving you kind of a shape that looks like a P, okay? Now, is this usually, and I say usually, would you guys say this is an aggressive initiative being taken by the bulls here that's highly bullish? Yeah, absolutely, right? Typically, when you're flagging off the open and you got a bull flag, right? Unless you had some significant difficulties in the beginning of the session, okay, the bull flag will look like this, okay, and the profile will look like this, okay? The inverse is true, okay, the inverse is true, of course, for the lowercase B-shaped profile, okay? You'll have a drop where there's not a lot of interest in transacting in this segment of the price action, okay? And then a whole lot of transactional interest at the bottom of the range, usually with a point of control right here in the middle of the tummy of the B. What does this typically denote, guys? And we're going to get through this quickly. What does that typically denote? Right. It's a more bearish profile, right? People are interested in transacting at the bottom of the range, not the top of the range. Now, is it fair to say that a lowercase b-shaped profile is always bearish? Is that fair to say? Is that a generalization? We can say absolutely not, right? Anything can happen, and sometimes b-shaped profiles turn into uppercase B profiles, right? Sometimes price will bounce, and in the beginning of the day at 9:30, okay, or 9:50, it'll look like this, but by 10:50, it'll look like this. Now, what causes this lowercase b-shaped profile to grow another tummy up top? All right, Wilson Chase, if you make a mammalian joke, I swear to God, we're recording. Nobody thought of it. We have too many men in this room, dude. It's a problem. Okay. You have a value rotation. Exactly. You have a value rotation where, some kind of buying pressure takes the auction higher, some kind of imbalance, and you start to build value at the top of the range, okay? Now, many things can happen out of this B-shaped profile, which we're going to discuss, okay? You could fail the B and be range-bound for the rest of the day. You could break out of the top of the V, okay? If this happens toward the end of the day, it's a screaming signal for an overnight, for example, many times, okay? But we're just talking about recognizing what this profile means, okay? It means that in the beginning, sometimes it's the opposite. Sometimes in the beginning of the session, you have a P that goes into a B because at the end of the day, you sell off and buyers support the lower end of the price range, okay? And sometimes you start as a lowercase b and fill in value at the top of the range, okay? So this B, okay, this is really important. This B can start as this, or it can start as this, okay? That dynamic, that process can be highly indicative. Right, John, exactly. That process, I was going to do a whole breakdown of the Friday's Tesla drip. I don't think I included it for today's slides. We'll have them for the next round. It's highly indicative. That dynamic, okay, of the auction is highly indicative of what may happen next, okay? So we have a B-shaped profile that into the close turns into an uppercase B profile. Okay, if we have a point of control very high up, okay, into value area high, all right, and we're coming off of selling climax, could that be an indication that we may be looking at potentially an overnight long and a gap and go in the opposite direction? Could it be indicative of yeah, absolutely. In the same vein, if we started as a strong P and we sell off completely, okay, through the bottom value area, we rotate right back and form value at the bottom of the profile here, is that a good idea to be taking that overnight long, thinking that you're going to gap for some reason? Is that right? Okay, so the process of how the auction builds value throughout the day is going to be highly indicative. Okay, it's not going to be able to predict the future. Okay, but it's going to be indicative of the general supply and demand picture. You guys understand what I'm saying? All right, and finally we have the D-shaped profile. Okay, this is your typical Gaussian distribution curve. Okay, your one standard deviation, 68% of the price is going to be traded between value area high and low. And in this, we have what do we typically call this type of profile, guys? What is the key word for referring to this profile? These keywords are important. That's why balanced. Exactly. It's a balanced profile. It means buyers are buying the bottom of value and selling the top of value. Now, let me ask you, in terms of proper positioning, right? Intelligent, advanced traders in the market. Are a lot of people shorting the top of value in a P-shaped profile? Does that sound like generally a good idea? Right. So when you have a P-shaped profile, okay, you've got fair value down here, okay? And given the fact that this is mostly usually a bullish context, okay, you want to buy as a general rule. Guys, this is just a general rule, okay? Best practices. You can be a buyer at the bottom of the value area. Being a seller at the top of value here is a bad idea, okay? Why would that be a bad idea? What is that profile telling you that the bulls intend on doing? Yeah, if they find further imbalance here, guys, okay, they're going to break out. They're going to take initiative. Remember that keyword, initiative? They're going to take initiative and try to go higher, okay? Do you see what I'm saying? Okay, now let's talk about the lowercase B-shaped profile. Is it an awesome idea? Is it an awesome idea to be buying the top of this value here? Is that like an amazing? Okay. Now you might tell yourself, well, JR is constantly trading curling wedges and pain trades. That's true. I am. But that's for a very specific reason, right? When we run into a demand zone in an oversold condition, okay, the people shorting the top of value here are going to do what? When buyers take initiative, okay, and break top of value, what are they going to do? They're going to cover, okay? They're going to duck and cover. However, okay, for the most part, and you may also say, and JR, you short bull flags all the time. I do, for the same reason, okay? Subtle imbalances in the market. But in generally speaking, best practices, okay? You want to be selling this top of value here, okay? Is it safe to buy the bottom of the value area here? Is that a safe trade? Is that one you take home to mama? Why not? Why wouldn't you take that home to mama? What do you have against B-shaped profiles? Well, yeah, exactly. They're indicative of weakness, right? They're indicative of, like, do you see a lot of bear flags off the open that look like B-shaped profiles or toboggans? Okay, so this is the flag. And this is the profile, right? Absolutely, right? A profile that looks like this is often indicative of a two-wave corrective, or ABCD in this case, lower. So as a general rule, okay, you know, there's fair value for sellers here. There's you know, not a good probability of buying here and being successful. Why am I mentioning this? Because I'm mentioning it because I see in my trade reviews, you know, and this is where I have some like face palming moments where I see you guys in heavily bearish B-shaped profiles try to bottom fish here, okay, with like weak bids, negative deltas, okay, tape taking out bids everywhere, and you guys are buying this, okay. You'd be surprised what some basic best market profile practices will do for your P&L, okay. Friggin' degenerates, I'm telling you, bunch of savages in this town, Wilson Chase. So the what about the D-shaped profile? I'm leaving the uppercase B for last. You have value area high and value area low. In this type of market, what does a D-shaped profile typically come out to look like? It's rangy, correct? So is it fair? Gas station sushi. Okay. Is it fair to say that in a range bound balanced profile that you're relatively safe selling the top of the value area and buying the bottom of the value area? Typically speaking. Right. Exactly. Now you're not going crazy trying to buy breakouts here, right? You're not going crazy trying to buy these breakouts. You're not going crazy trying to short the bottoms, right? Because what will happen 80% of the time when you have this type of distribution curve around the mean? You're going to stay in the range, right? So when this Luther Vandross song comes on, okay, you're doing the simple 1-2 shuffle, okay? You're buying, typically this is obviously, there's a million exceptions to this, guys. Anybody who's taken Momentum Mastery knows, okay? There's a million exceptions here. You know, you could be in a range going like this, okay? You could have a shakeout bar here and then a V in a platform, or a, rounding type of bottom here, a saucer type of scenario, and that can often break out. Okay, so there's obviously a bunch of finer exceptions, but generally speaking, okay, your price action, this is a super, like, if you take nothing else out of this entire course, okay, this is the most key important concept that's going to save you a whole lot of time and money and anguish. Your price action technical analysis, okay, and your volume profile analysis should never be at odds, okay? So if you're in a range-bound type of situation and you're trading a D-shaped profile like it's a P-shaped profile, okay, you will find nothing but suffering in the markets. Your price action TA needs to be completely synced to your reading of the volume profile, or you'll experience nothing but suffering. Is that resounding with anyone else other than Andrew? Just like raising his hand. Bro, I hear that if you offer up your ponytail and sacrifice, like Abraham offered up Isaac, that you'll never make that mistake again if you sacrifice it to the gods. Just so you know. All right. Anyways, learn from Samson. All right. So the uppercase B profile. This one is a little bit more complicated. Okay. You want to apply the rules for the uppercase. You want to apply the rules for the B-shaped profile when you have this profile going into this profile, meaning if you start in a P and you end in a lowercase b, you're applying this rule set, okay? If you start as a lowercase b and end as an uppercase b, you want to apply this rule set to your profile. Does that make sense? These are like super basic concepts. Okay. Really basic, but having read 18 million emails from you guys, I can reliably tell you that a lot of you guys don't follow this stuff. All right. Artie says, back to the B-shaped profile. Let's say we sell the top of a B shape, as mentioned. How do you know the thin volume level about the sell price level is buying or selling in balance? And the price doesn't go up to make the P shape. That is contextual, Artie. So you're looking at volume delta, you're looking at bids and offers, okay, and you're looking at structure and patterns. Okay, we're going to see some examples of that. Okay, I just treat them as two separate causes. Lance, you've gotten remarkably smarter over the years. I think you took that pill from the guy in Limitless. Remember that? You know what movie I'm talking about? You had only one. You can only go up. That's a great movie. All right. So, guys, those are the basics. They're super simple. A trained monkey could follow them. Okay. The thing is, in the heat of the moment, you're bound to do a lot of silly things, including trying to fade the top of profile in a bull flag when you're clearly in a P-shaped profile. Okay. And sometimes it's not so easy to see, right? Sometimes sometimes you have a strong opening drive and it's 3 legs higher, and you tell yourself, clearly we are overextended here because RSI is at whatever 70. Okay. But you look at the profile, bro, and you're like, you are in there. Okay. You are building value into the third leg. It's super bullish. Has this ever happened to you where a move goes into its second or third leg, and for some reason you have arbitrarily decided that it must come down because it's clearly it's up 2 legs or it's up 3 legs, and it must come down, and you're not bothering to look at your profile. Okay. Tesla, I believe if you look at Tesla yesterday, didn't build a P shape, upper P, until it was up 15 points or something ridiculous like that. Okay. So if you have some kind of bias, okay, now you should remember you should refer to the biases we studied last week. But if you have some kind of bias telling you incorrectly the price must go down, you should overlay the profile next to it, because oftentimes, okay, you are selling you are just, you're above point of control and you're selling what, you're not even at value area high and you just get smoked. Does that sound familiar? Does that happen to anyone you may know personally? Okay. So overlaying your profile with your basic technical analysis, your indicators, and your price action can be a real lifesaver. Okay. All right. I present to you our resident Wookiee here, the 21 rules of volume profile. There's a zillion rules of volume profile. These are the things that I consider really important. And these are the things that all of us get. These are the things I consider really important. Okay. So, I didn't have time to go chart hunting for every single one of these, so I'm gonna draw the basic schematic out, and then we're gonna see them in a zillion chart examples shortly thereafter. Okay, so let's go ahead and jump in. Number 1 rule, and these aren't numbered. I just like calling this one number 1 rule because this one's a widowmaker. If volume does not steadily build value higher or float up through volume gap significantly after initial balance, change of trending breakout day is very low. Okay. Does everyone know what the initial balance is? Chewy's legs. I don't know. AI does some weird things. Yeah. Okay. So your initial balance, okay, is the first 60 minutes of trading. A lot of people like to see where value area high is after the 60 minutes. And depending on the kind of profile you've built in the order flow, it can be a fantastic determinant of whether you're going to have a trending day or not. Okay. So it is really important. So number one rule, if volume does not steadily build value higher or float through volume gaps, okay, after initial balance, change of trending breakout on the day is very low. Okay. Did you mean chance? Yes, I meant chance. Sorry, that's a typo and a half. Chance. This is chance. Okay. Now let me draw this out for you guys. That's a major typo. Sorry about that, guys. This is chance. Chance, not change. So what does that mean? Okay. So oftentimes, okay, you'll have an opening drive. Okay. You'll have an opening drive. And this is, this is 9:30 and this is 10:30. Okay. And oftentimes, you'll build a nice P shape here into that high. Okay. And what you'll see, and in the price action, what this typically begins to show up as is either topping tails, okay, or structural losses of symmetry. So you'll see that big high, and then you'll have a pullback and a really scary looking ledge, okay? And basically what will be happening here is the longs will lose their transactional edge over sellers. And while you were printing a very strong P-shaped profile here, you start, after the initial bounce, you'll start to significantly wane. So if you don't continue to steadily build volume higher, okay, so you hit, imbalance, balance, you build a new cause here, you transactionally build value. If you don't either hit imbalance or start building volume profile higher here to start to look like this, okay, it is very likely that move is going to get that move is going to get faded. Sorry for the typo there. Good catch, whoever that was. Ash has been on the ball today. Does that make sense, guys? So watching that initial balance and that profile in the beginning of the day is essential. If you stop building that transactional volume, okay, what is going to happen to that high volume node? So say you have a strong two-legged move higher and your profile looks like this, okay? What is going to happen? Your point of control is here. What will this high volume node become if you ledge out and fail here? Resistance. It will become resistance, but specifically, it will become not only resistance, but it will become a short-term overhead supply zone. Okay, and ultimately, okay, if you have a range bound type of move that slowly, goes in phases and slowly comes in to the bottom of the day, you'll build a balanced profile. Okay, if instead of doing that slowly, you have a total liquidation break, okay, what is that profile going to look like by the time you hit near the lows of the day? It's going to look like an uppercase B, right? You're going to have, and in this case, it'll be the real bearish kind, right? Where you had a P-shaped profile turn into B, right? Lowercase b into uppercase B profile can be very bullish. This is the opposite of that, right? So rule number one, this is the number one thing I look for in the day into the 1030 print is where is the volume profile relative to the opening balance, okay? I know Jim Dalton doesn't like to look at opening balance, initial balance anymore, I think it's still super relevant and important for what I do. Okay, if name loses P-shape profile and loses lower gap up, it is very likely to fail. So this is a day 2. Okay, so for example, you had a killer of a day the prior day, right? So you're going like this, okay? You're going like that. You have a beautiful P-shaped profile on the prior day. A lot of like when Palantir is running, when names like Palantir are running, or names like Tesla are really strong, you see P after P, right? Like it's just unbelievable how it forms value day after day. Okay. So when you gap up the following day, this is like a really important thing I look at. Okay, if you have a gap up the next day, okay, and you rotate into the prior value area low, a value area high, or point of control. Okay, so this is your VAH and POC. Okay, if you lose the point of control early on the day, okay, that gap and go is probably a no-go. Okay. The other thing I often see, okay, and this is how bases are created. So oftentimes you'll have day 1, day 2 does nothing, day 3 does nothing, okay, and day 4 maybe gaps lower and breaks through. Sound familiar? Yes, lose the prior day's POC. That's what I said. When you rotate on day 2, okay, when you gap up on day 2 and you rotate beyond value area high and beyond point of control and can't rotate back, that is a very, very significant, almost surefire sign that this gap and go is a no-go. Okay. Now, oftentimes, what we'll see, guys, is AMD does this a lot, where when it's ripping, you'll have a really strong day and then 2 or 3 days of this kind of thing. Okay, where it'll come into the prior day's value area high and point of control and bounce, value area high, point of control and bounce, and it does that for a couple of days. But it rotates back. Always rotates back to value area high. What does that typically reflect in terms of the confluence of price action and order flow? What is that typically telling us? It's not strong right now, Ash, but acceptance. Okay, that is certainly digestion. Okay, those are ancillary things that are happening. A cause is being built for sure. The order flow term I'm looking for is reaccumulation. Correct, Pablo. Okay, so when you have a day 1 that's a very strong P-shaped profile, okay, the thing you need to look for most, okay, are signs of either rotation, okay, or price acceptance over the day's prior value or high, okay, and that will give you a really good roadmap. That will give you a really good roadmap in terms of what is most likely to happen. Rotation, as we discussed during the auction market theory section way, is the term for when you have a balanced profile, when you go from top of value to the bottom of value and you rotate, okay, within a specific fair price area, okay, value area. Does that make sense? So when you have, we went through the 5 rotationary examples in terms of value area, right? So remember we said, okay, this is 1, right? Then this is 2, your bounce of point of control, right? This is 3, right? This is 4, etc., etc. Okay, a rotation within a value area way is when you are is when you rotate from value area low to value area high. Okay, because you have to keep in mind how do I delete only specific things here? Oh, look at that. I'm a genius. And I'm doing this without Ralph, mind you. Ralph is not manning my keyboard or mouse for a change. Okay. So like when the market opens, right, you don't know. I'm going to change colors here, right? This is a rotation, right? This is a failed rotation, right? You rotate the prior day's point of control and you fail to get above it, okay? And what do we call this? What do we call this? What do we call this when it happens? We call this a gap fade reversal, right? When you gap up after a strong day on day 2 and you immediately fail to control the prior day's point of control, okay? And then sellers come in here and pounce. And what are these dudes doing? Seeing that, their hard-earned efforts are reversing. What are these people doing right here? Question mark. Yeah, they're jumping on the selling wagon, right? If these people don't see that happening, okay, and instead see that point of control of the prior day is forming value and building a cause, they're much more likely to perceive reaccumulation because that's actually the more likely thing that's happening, right? And that in and of itself will often lead to the secondary leg taking off, right? Just like we talked about in Momentum Mastery, you have periods of markup, periods of reaccumulation, and then you have your Jack and Buick, and you move on, okay? So if the name loses its day 2 gap up P profile from the prior day, and you lose point of control, that is definitely a sign that you're likely to fail. But, okay, you always have to think of the countervailing. If you start to create value between point of control value area high for 1 or multiple days, okay, what the market's telling you is that buyers are not looking to transact beneath this prior point of control, right? Point of control here being very important given that it's a bullish P-shaped profile. They're scooping as many shares as they can here. Why? Why are they scooping up as many shares as they can? Yes, they think it's going to go higher, right? And eventually, okay, what mechanism is taking place at top of value here relative to that day 1 P-shaped profile? Right. Diminishing supply, absorption, right? The term that I'm looking for is absorption. Reaccumulative, when you have a P-shaped profile on day 1, your reaccumulation, okay, your reaccumulative phase is all about buying at fair value, which is now that day's point of control, and absorbing whatever little overhead supply you have from day 1 until you run out of supply. And what happens? Imbalance. Right? Not enough shares. And what happens to price? Well, you need price acceptance for all of this to happen. Okay? But I'm trying to point out the mechanism that's taking place here. Okay, you have a day where stocks are marked up noticeably, and you have a point of control from day 1 where now becomes support, right? You got a little bit of a polarity shift, right? And you have people slowly chipping away at top of value until that until there's no overhead supply left, okay? And that imbalance takes the auction higher, okay? So when you have a day one P shape, okay, the thing that you're looking for on the gap up is our value area high and the P and the our value area high and point of control on that retest going to be respected or not, okay? It's very common after a strong P-shaped profile, okay, for there to be a retracement. Let me ask you guys a trivia question. What is, in which market condition is a significant retracement of a P-shaped profile lower highly likely? Does anybody know? This is auction theory 101. In which market scenario after a P-shaped profile do I almost always accept a significant retracement to point of control or even lower? Overbought. For sure overbought, but what kind of overbought condition? Igor's right. Exhaustion, you're close. RSI divergence, definitely a bear market. It's the short covering rally. When you have a P-shaped profile in a short covering rally, that prior day's P-shaped profile is almost certainly going to be tested, if not violated. And sometimes you're going to get as much as a 50% retracement. Okay. The classic bear market P-shaped profile short covering rally, day two will almost certainly always retrace. And if you don't believe me, back test it, guys. Go in bearish selling climaxes when you have a violent overbought P-shaped profile short squeeze, and you'll notice that you're always almost certainly going to retest point of control. And if not, you're going to be visiting 618 and 50% retracement territory. You hadn't noticed that, Sun Devil? I have examples. I brought receipts, my friend. Anyways. Hashtag the more you know. Anyways. This is all like basic auction theory, Sun Devil. It's to me it's shocking that more people don't use it. But anyways, so that's the P profile day two gap up rule. Okay. Next on the agenda, the weak hands rule. Short covering rallies typically retrace the 618 or the 786 of a climactic move with a highly voluminous P-shaped profile on low on very thin structure off the bottom. Artie, they look a certain way. I have examples. We're going to get into it. Now we're nerding out, right? You guys have been asking me about volume profile forever. Now we're in it to win it. Okay. Next one, the weak hands rule. Rule 3 of 21. This is awesome, says Ash. All right. Buyers unable to hold upper volume profile node create supply zones. Sellers unable to break lower volume nodes create demand zones. This is pretty obvious. I'd say 90% of you guys ignore this, like all the time. It's like somebody put a lot of you guys through buy break of day high and sell break of day lows, brainwashing academy. Okay. Weak hands create demand and supply zones. Okay. And they create what? What do weak hands create when you have a high P with a divergent oscillator and lower volume? They create opportunity, but specifically, what is that break called? It's a liquidation break. Ever notice that you'll have a liquidation break, guys? Okay, you have your flag here, your beautiful P shape. You're in love with it. Okay, and pesky Uncle JR is going on the mic, going, "I don't like this, guys. I don't like this one bit." Okay, the oscillator's through the toilet. The delta is negative, deeply negative. Every down candle is negative 1500 on the spoos. Every up candle is like 24. The oscillator keeps diverging. The volume is crap. And you're like, no, JR, we're going to buy break-a-day highs, right? And what happens? Cataplooey, right? Now, what's the one thing that's common about liquidation breaks? What characterizes liquidation breaks? Well, one thing is, obviously, because you have a very thin profile in this section, right? They're very quick. They're taking out stops, right? And they're going through this, they're going through the thin structure, relatively thin structure of the P quickly. But as quickly as they go down, guys, what do they tend to do? They tend to bounce, right? Okay. The market seeks liquidity above all things. The problem is that people, okay, I'm going to make this red so you can see it. Okay. This is your prior point of control. Okay. The problem is that people are like, yay, there's your bear trap, right? And they're buying here and here and here, like super close to a freaking Great Wall of China worth of trap sellers, right? Worth of liquidity, thinking that, they're going to get either an inverse head and shoulders break, right? Or they're going to slice through that like a hot knife through Gruyere cheese, right? And what ends up happening is that they're not waiting for the pinch of point of control. They're buying right into it. And oftentimes, okay, you get a two-wave corrective lower, and you get auction repair right here on the failed auction, right? So you gotta think overhead supply zone, okay, when you have weak hands and weak order flow into a P-shaped profile point of control. Does this make sense? Correct, Selrack. For the sake of all that is holy, just let it break out and then have fun with it. Exactly. Okay. But seriously, how many times, okay, do I tell you guys, look for a liquidation break, careful. This is a bull trap. Okay. They're going to run the stops. And then when you're like, you get excited because we saw it coming, and then you buy right back into that point of control and get shaken out. Okay. Okay. So this is something you need to be aware of. None of this is difficult. Okay. These are not difficult concepts. Okay. Your weak hands will create high volume nodes, and those high volume nodes will act as supply or demand zones depending on the structure. What you have to be aware of, okay, is you need to skate to where the puck is going. Okay. And right here or here or here or here, you don't know where the puck is going. Okay. Now, if you break out, pull back, and hold the level, okay, you have a point of control polarity shift, which is one of our 21 rules of volume profile. But until that happens, you don't know. Okay. So you're better off reacting than predicting. At the same time, like when you are, you have your two-wave corrective lower here, okay, and you want to short through these lows because you think you're going to get repair and the flush through, okay, you could be setting up a what? A W bottom and a neckline break, right? So you can't be predictive here either. Do you see what I'm saying? So the volume profile will give you a footprint of what happened, and based on that, you can decide what events to react to. Does that make sense? This is the second concept. Like if you walk away with nothing else from this course, okay, when you're thinking about the operational roadmap of your trade, a lot of you guys. I can't believe I just did that. Oh, thank God. Control Z for the win. That's amazing. All right. A lot of you guys, let me just delete carefully here. This was a life-changing. It took me years because I am officially an idiot. Okay, it doesn't have to take years to get this. Seriously, I'm a world record holder and being a knucklehead. Like in terms of your operational thinking here, guys. Okay, the only thing you can do on this retracement is pathing. Okay, now if this is a 2 minute, this is a 2 minute 200 or 5 minute 21 or whatever it is, shakeout hammer, and you're a quick scalper, yeah, you can ride this up, no problem. Okay, like we do that all the time if you're fast, but that's not the main point of what I'm trying to convey here, and this is a really important point. Okay, we can see the breakdown coming because it's in the order flow. It's in the volume profile. Okay, we can see that coming from a mile away. What you can't predict. Okay, because here's a cause. Okay, not wrong. Here's a cause. Okay, that's not right. I am terrible at this, Monica. I should have like a drawing stenographer. So here's the cause, okay? Here's your cause, and here's your big liquidation break, right? That we can see from a mile away. You can't possibly predict once you get a liquidation break whether this is going to be a two-legged move lower, okay? You don't know on this thin profile what the market's going to really want to do, okay? And you really can't predict what it's going to do back at the overhead supply, okay? Because this can turn into a tricky dick, okay? If buyers come back with a vengeance, especially in this market, guys. In this market, where Trump will say a thing and you're flagging. You got Tesla on. You're wearing the Tesla T-shirt. You got the beer helmet on. You're all excited. You're ready to add on the next breakout. And then Peter Navarro comes and says a thing. And then the market just gives you a nasty liquidation break. They run the stops into thin profile. And then Trump comes back and said, no, that's not what I said. Okay. And then you get that V. Okay. But you're getting a V into an overhead supply zone. Okay. This is super important. Use the technical analysis skills you have, your volume profile, your order flow, et cetera, to create operational pathing decisions on reactive methods. Okay. What does that mean in plain English? It means that you're not trying to front run this breakout here like a dum-dum, okay, with, freaking, I don't know, $2 worth of risk for 10 cents worth of gain maybe, okay? Instead, you're waiting for confirmations of either reaccumulation or rejection, okay? You don't know which way this imbalance is going to go. You know that you've created an overhead supply zone through a set of weak hands. You don't know whether that overhead supply zone is going to be overtaken and create a massive Jack and Buick type of imbalance, okay? Or whether the shorts are going to come here and trap the bulls and pound them into the dust and give you a measured move on this guy, okay? You just don't know. So the problem is, especially with novice traders, you get so excited that you're starting to see the clear picture on the chart that you don't apply any kind of operational roadmap, and you guess and you take chances and you gamble, okay? There's no reason to do that, guys. Derive your operational roadmap based on reactive methods instead of trying to predict the future, okay? Does this ring a bell? Okay. All right. Like next time you see this kind of structure, I want you to stop thinking about the trade and start thinking about the path, okay? And when it is going to be a correct inflection point for you to make a Educated, reactive decision. I need this. This took me, vet trader. I'm ashamed to share with you guys how long it took me to get this concept. You know, I was so anxious as a novice trader to just understand what was happening in front of me that once I saw that overhead supply, I would just blindly short it like a dum-dum, you know. It's a real thing. Thanks for teaching this to us. I don't know how much I'm teaching. I'm just sharing this is the what do they call it when you have an airplane crash? This is the debris field of my past failure. I'm giving you guys a tour of the debris field, the crash site. Anyway, so this is really important. The weak hands rule, guys, is essential. You are, through weak hands, sellers or buyers, inadvertently creating so much value, okay, that it creates demand and supply zones, okay? Like a Manginai fight. All right. You guys find this useful and helpful, or is this too basic? All right. I'm getting 11s. Okay, that's good. All right. You mentioned oscillator. Do you use RSI or MACD? I use RSI. Some people use MACD. Some people use SMI, stochastics. In my opinion, it's all the same stuff, man. Generally speaking, okay? There are, like, when I swing trade, I like to couple, like, RSI with CCI sometimes. The CCI and ADX are phenomenal as, like, oscillating momentum gauges on larger time frames, but for day trading, just pick one and stick with it and learn how to use it really well. And I don't think you can go wrong, man. They all kind of do the same thing. Yeah, Ash, the ADX is amazing. I love it. Are you using 5-minute profiles more than 15-minute? Do you trade in 5-minute intervals more? 5-minute profiles? I don't profile in the 5-minute. I mean, I use my main time frame for trades is usually 5 and 15 minutes, vet trader, unless I'm scalping in the morning, like at 9:32. I'm using the 5-minute chart and the 15-minute and the hourly. Look, here's the thing, okay? And we actually discussed this last time, okay? You're gonna finish today, and you're gonna start seeing this stuff everywhere. Okay, so make sure to slow down, because it happens to me all the time. Once I understand a new concept, I start seeing it in my freaking soup. You start to get like clarity on concepts that you weren't aware of before, and sometimes you can overuse them a little bit. So, take it slow. I see you have a 2-minute chart up. I have no charts up. A lot. I have a 2-minute chart up way because it allows me to see the finer points of how price action is developing. I'm trading off the 5-minute chart. I make trading decisions off the 5-minute time frame, but sometimes I like to look at the 1-minute just to see. The 1-minute chart will give you information that the 15-minute chart cannot, and vice versa. Okay, so sometimes looking at smaller time frames, not for operational decision making, okay, but to see how a larger candle is formed, is hugely helpful. As a matter of fact, yes, A-test is on the 5. As a matter of fact, I challenge you to do this. Go through all of your setups that failed, okay, on the 5-minute, and then look at them on the 1-minute and see if, based on looking at how the 1-minute chart formed the 5-minute, that you would have taken that setup. And you'll find that a lot of times you'll be like, oh man, that's not good. Are the profiles you are showing today? The profiles you are showing today are usually in daily and in 5-minute charts. Well, there's a session volume profile of vet trader, which is a profile that takes into account the entire day, right? And then there's fixed range volume profiles, which profile a certain segment of the action. It could be an hour, it could be a week, it could be 15 minutes. It depends on what I'm trying to look at. Basically, a fixed range volume profile is like an X-ray machine or a magnifying glass, right? you use it to look at very specific things. So yeah. By the way, guys, Lance has become a profiling fiend. He's an expert at this point. I've created a monster. So if you have any questions, don't ask me. Just ask Lance. Send all your profile questions to Lance. No, I'm just kidding. No, but seriously, he's become quite a fiend. Oh boy. You're welcome, Mother Ever. All right. So when you say at 21 review up, you mean the 5-minute chart? Yes, the 5-minute chart is where I live. When you do session profile, do you include pre-market poem? No, I don't. I don't find that particularly useful, other than the index futures, which I think are essential to profile. Yeah, great question, Pablo. Thank you. All right, so we're through the third law. Let's go into 4 of 21 here. Let's see. How much time do you guys have today? Because it's what time is it Eastern? It's 1:50. All day, almost. Yeah, all day. All right. Until midnight. Wow, you guys are freaking. Nobody here has a life. Okay, glad I'm not the only one. All right. The fairest of them all rule. A little what is that? Snow White? No, that's not. Oh, which story was that? The fairest of them all. This is why we need women in the room. I think there's like one chick in here. Snow White. Yeah, I should know that. We need some diversity, bro. This is biggest sausage fest ever. My God. Okay. The fairest of them all rule. Auction theory basic. Yeah, I got the babysitter for another couple of hours. All right. Green PJs, are you a girl? I thought you were a dude. Sorry, I think I've been calling you bro for the past 2 weeks. My bad. It's okay. You can misgender me as a potato. You're a girl way? Oh my God. We need to start adding pronouns. I thought you were a dude also. Okay, so we got 2 girls and Monica, so 3 girls. Unbelievable. All right, let's get back to business. So, auction theory basic. Point of control, fairest price and balance range. The low volume node is not fair price. So when price fails the high volume node, most likely direction is POC or an approximate high volume node. This is a really simple concept, okay? Just like we have price gaps in charts from like one day to the next, we will have price gaps in terms of value within a balance range, right? So oftentimes, speaking of like liquidation breaks and stuff like that, right? We'll have a chart that looks like this, right? And sometimes you'll have like a flag, but that's like really wide in its range, right? And it forms a value area with a high volume node point of control here, okay? And then there's like no volume between like these 2 levels, and then a high volume node here, okay? When you get that liquidation break due to all the other technical parameters we just discussed, okay, your high volume nodes are likely to get skipped, and your liquidation is most likely to revisit the next area of higher value, higher volume node, okay? This is really, really important. Oftentimes, guys, we're shorting, Tesla or NVIDIA or something like that, and what I'm looking at to get through aren't necessarily candles, although they're really important as well. I'm looking at the prior day's volume gaps, the areas where we fail to transact with any kind of significant volume. If we break through them quickly, right, it's usually a sign that we're on the right track. If we fail to transact through those low volume nodes, okay, oftentimes there's big trouble in Little China. Okay. By the way, if I've misgendered anybody, I know it's like, oh man, if I called you bro or dude, please do not take any offense by it. If you're a girl, I have no idea what race, gender, age anybody is, so please don't take offense, okay? Nice, Wilson Chase. Persevere, you're also a girl. Jeez. Okay. Anyways, so they're among us, despite the utter vulgarity of this room. I don't know how you you guys put up with this circus. All right. Anyways, so just to recap, point of control, fairest price in the balance range. All right. A low volume node is not fair prices. Do you guys understand that concept? Like if you look at a low volume node and you're expecting a lot of transactional interest there and typical like buying the dip activity, that's going to be a very risky proposition, right? You guys understand that? What happens, guys, when you have a liquidation break, a high volume node, say 2 points underneath it, okay, and an anchored VWAP, and say I don't know, 5-minute 21. Do you think shorts are going to try to push through here, or do you think you're going to get a little bit of a retracement back to the prior value area low? Yeah, exactly. How many times a day, guys, do I say to the room, guys, expect a technical bounce here, okay? A lot of those times, I'm seeing the confluence of two-dimensional indicators and lagging indicators like moving average and VWAP, and I'm looking at the volume footprint, right? And I'm saying, okay, we're gonna fill this gap, okay? We're gonna fill this gap, and we're gonna bounce, okay? I'm not talking about a crossover. I'm just talking about a rising moving average. Green PJs, okay? Does that make sense? Now, by the way, one thing you want to look at throughout the day, okay? One thing this is a little pro tip. One thing I'm constantly focusing on here, okay, is I'm looking at the volume gap, okay, and I'm watching how it's getting filled. How much transactional interest is there in filling that gap versus rotating right back to value area low? Right? What do you guys think is more bullish? Okay, watching this volume gap here. I'm going to make it red so you guys can see. Watching this volume gap here transact and get filled up over the next 30 minutes or so, or a rotation right back that breaks value area low and holds it. Right, a quick rotation. Why is that more bullish, guys? Why is that more bullish? No interest, correct. No interest, no price acceptance of that level. The market is not interested in transacting there. Are shorts interested in making a stand here? If this happens, no. They don't want to get run over, right? Okay, so you have to watch. This is super important. Key concept, okay? When you're looking at the fairest of them all rule, you have to watch whether you get a V off that lower high volume node that catapults you into a full rotation back to the prior value area, or if you diddle in the middle and start to fill that profile gap and quote unquote build value. Okay? Does this make sense? Okay. I know this isn't exactly what most people think of as tape reading, but this is far more important than reading time and sales like Neo and the Matrix, okay? These are the clues the market is giving you about where the auction is most likely to go. Does this make sense? Now, we're gonna go balls deep. Pardon my French. Sorry, Monica. You're gonna have to bleep that one out. We're gonna go deep on the we're going to go really deep in terms of reading the tape, okay, reading the order flow. But in order to read the order flow, okay, you have to understand what the hell you need to be reading in the first place, okay? You need to understand what the context structure roadmap of that order flow is doing, okay? Trying to read tape, if you don't understand the difference between a rapid rotation from one high volume node to the other and value filling between two value areas or two high volume nodes, there's no tape reading that's going to fill that gap. No pun intended. Make sense? Is this filling some gaps for you guys? I mean, you guys have been watching me profile the market for like years at this point. Are things starting to click now? Okay. All right. Good. All right. So that's rule number 4 of 21. Let's keep going here so we can finish at a reasonable time. Awesome. Okay. I know a lot of you guys. We started. I introduced volume profile in like 2022, so it's been a while. I'm trying to close some gaps for you guys. All right. The monkey knife fight rule from the famous Simpsons episode. So high volume nodes many times consider fair price or fair value for both sellers and buyers. Failure of either side causes violent movement. What's the keyword for violent movement, guys? What is being created that creates a violent movement? Imbalance. Yes, obviously it's a cause, Todd, but the imbalance created, right? The more transactional commitment you have to a level, the more people are transactionally committed and involved in that level. What happens when one side wins that tug of war, guys? Anybody ever played Jenga? Right? A big old tower comes falling down. Okay? So, what are some examples of the monkey knife fight rule? The H setup, right? We always talk about the H setup and describe it as a monkey knife fight, right? You have the H setup, for those of you who don't know, is when you have a strong markdown here, right? A strong amount of selling, a retracement, a top, and then you form an H here, okay? In the H setup, longs, I'm going to make the longs green. Okay. Longs are thinking what, guys? What are the longs thinking? What structure are they looking at? Okay, so the pattern is a W, and what kind of structure is this? It's an accumulative structure, right? They think they think the lows are in. They're accumulating shares. Okay, they're buying here and here, and on this pullback, and they're buying the bottom here, and they're becoming what? They're becoming highly committed. That commitment creates what? On the profile, what does that that commitment look like? In this case, it's a B for sure, but it creates a high volume node, right? Now, what are the shorts doing? I'm going to make the shorts red, okay? For the purposes of this shindig. They're shorting here, they're shorting here, they're shorting here, they're shorting here, here, right? And each of these bars is, imagine several 5-minute bars, right? So they're shorting the inside bar breakdown, they're shorting candle over candle, they're shorting the 3-bar play, right? And you get to the inflection point. You get to a B shape. You get to a B shape here, okay? With a tremendous amount of transactional commitment, okay? Okay. This is how massive imbalances in the market are created, right? What happens, for example, when a Head and Shoulders fails to break the neckline? Ever see that beauty in action? Ever see what after that two-wave corrective, what happens here? You get a measured move back to highs usually, right? He goes, wee. Right, exactly. So the monkey knife fight rule, guys. This is first of all, you need to understand the structure and the patterns that typically form these. Okay, there are specific patterns that really attract both sides, like flies to say egg salad sandwiches. It's not really what I wanted to say, but I want to limit Monica's video editing time and bleeping me. Okay. Thank you, Wilson Chase. Keeping it classy. Okay. So longs are seeing a falling wedge. Okay. Okay. They're seeing a falling wedge. I truly suck at this. Okay. So the longs are seeing a falling wedge. The shorts, okay, the shorts are looking at a neckline break. Okay. You see what I'm saying? And the longs are looking for a falling wedge snapback, two-wave corrective to the pivot, okay? And then they really want to add here and give it to the shorts good and hard, okay? There's definitely, in terms of cognitive parallax, remember the cognitive parallax phenomenon we talked about last week, a distinct paradox here where two groups of people are seeing very distinct outcomes that are divergent from one another, okay? What that creates is a tremendous formation of high degrees of transactional value. When one side is wrong, both sides end up going in the same direction. Make sense? So the monkey knife fight rule, okay? First, you have to understand what patterns and structures typically form these, okay? Like pain trades are another example, right? You have to understand what structures form these, but then you have to recognize when high degrees of transactional volume are forming high volume nodes, because those are going to be essential for you to be making operational roadmap decisions. Okay? Absolutely, Ash. Your mind has to be like I like to call myself Lenny from anyways, Memento. All right, John K. When you're looking at a pain trade, what are you looking at in the volume profile? Well, I'm looking at three parallel things. Okay, I'm looking at three parallel things. Okay, I'm looking at the high volume node. I'm looking at the rebid levels on the tape. Okay, and I'm watching the order flow. It's not so simple. You'll notice, John, we murder the pain trades. Like, how often do I call a pain trade and I'm actually wrong? Doesn't happen very often. Okay, this is the Holy Trinity. Okay, the Father, the Son, and the Holy Order Flow. Okay, is identifying the high volume node, so you know where stops are going to start to run. Okay, watching the rebid levels and the reoffer levels, and then watching the order flow. Okay, if for example, okay, you have really strong positive delta correlation on the upside, okay, and weak negative delta correlation on the downside, and you start diverging on the oscillator, okay, it's freaking go time. It's time to smash some heads. Time to roast some bears. You know what I mean? You got to look at a complete picture. It's not one thing, dude. And this is this is more art than science. Okay, it takes a really long time to get good at pain trades. That's why a lot of times I tell you guys, pain trades may not be for everyone. They're a real advanced technique, And, people who like to follow me are usually late on the pain trades. I don't know if you've noticed that. A lot of you guys, I'll call a pain trade out with a buy stop. And sometimes if you don't front run it, you'll get 40 cents of slippage because it just goes so fast. Why is it going so fast, guys? Why does it explode after it goes through point of control? Yeah, it's hitting a massive level of imbalance because of running the stops. Do you guys see how these terms are so important? What creates that imbalance? Stops are getting hit everywhere, right? When you start thinking more like a market maker, okay, and you start looking at market structure and profile along with your price action technical analysis, a world of opportunity opens up, okay, involving monkeys and knife fights, apparently. Can you go into rebid now or later? That's going to be a volume 2 of this course. When we go into the actual time and sales and the footprints, I'll be happy to go into it. It requires a lot of practice. Wilson Chase, you're not going to like what I'm going to tell you, okay? But I used to record my screen the entire day, and then I used to rewatch the tape at key points of the day, and I would watch it again and again and again till I got good at it. There's no other way to do it. You have to, if you're going to be a good tape reader, bro. You have to rewatch the tape. Okay. I'm talking about in this case right now. The rebid question was time and sales, but there's also a rebid in the footprints as well. Okay. Listen, if you want to get good in this business, you're going to have to commit inordinate amounts of time to it. No one goes into trading the markets because they like free time. All right. Anyways, so yeah, the onion is being peeled. It's not a pretty picture. All right. So does everyone understand the monkey knife fight rule? Okay. You see monkeys fighting, you shake the champagne bottle of victory because something gnarly is about to happen. All right. Okay. All right. The hanging nail. Okay. Ever walk on somebody's deck and there's a giant steel or copper nail sticking out? And you're like, bro. Yeah. Your deck. Yeah. We'll get Ralph on it. He's my go-to guy. I swear to God. But this time next year, I'm gonna have him doing my plumbing and my taxes. The guy is unbelievable. All right. Anyways, I've developed a very strange kind of dependency on Ralph. It's gonna bite me in the butt one day. He's gonna stop taking my tech support calls. It's gonna get ugly. I can feel it. He has photos. Oh. All right. I'm not that kind of girl, Wilson Chase. All right. Back to business. So a hanging nail, like a nail that's a protruding nail, right? Obviously, I'm talking about bottoming and topping tails, right? This is what we're talking about here. Hefe, we need to start one yesterday, bro. I'm telling you right now. Tails are mofos. Hey, listen, diamonds may be a girl's best friend. Topping and bottoming tails are definitely a day trader's best friend. That's all I'm going to say. All right. So high volume node in upper end of the range means active sellers. Usually means abundance of sellers. Vice versa, high volume node at low end of range means active buyers if you're seeing topping and bottoming tails, right? Therefore, the situation helps determine trading range. Price will not move until high volume node is absorbed. Key term here, absorbed. Okay, so, and I've mentioned this in passing before. This is super important. Okay, oftentimes I will see you guys. Okay, try to buy the top of a flag, waiting for that breakout, and you get hammered and hammered and hammered. You're getting chopped up, and you don't understand why, because it's breaking out by 1 cent, it's breaking out by 2 cents, it's breaking out by 3 cents. But what you're not seeing, okay, is that the delta divergence here is telling you not to buy it. Okay, you have a very high point of control on the profile. Okay, you have a very high point of control on the profile. Okay, and you get high volume. Okay, this is the volume here. So low volume, high volume every time you get a bottoming tail. That is not a sign of lack of buyer interest. What that means is that buyers are coming into that narrow range between point of control, okay, point of control and point of control and value area high, and they're being met by high volume selling. Okay, so when you get these higher volume candles into either point of control or value area high that leave topping tails, what that's telling you, okay, is that you have, remember from Momentum Mastery, price volume divergence. It's a price volume divergence that's failing to absorb those sellers. Okay, now those may be sellers taking initiative. Okay, or they may be responsive sellers selling prior overhead supply. In either case, okay, the market has more absorption to do. Oftentimes, this will be day one, okay, and that flag will never break. Sound familiar? Okay, and you get that profile for 2 more days, okay, and it's that profile we talked about earlier that actually holds value area low on the flag, never goes lower, okay? What's happening on days 2 and 3, guys? What's happening on days 2 and 3? A lot of times, reaccumulation, but more importantly, absorption, okay? These sellers are getting slowly absorbed. Exactly. You're building value, you're reaccumulating, and more importantly, you're absorbing these sellers. So when you see a high volume node and high volume candles forming topping tails at the top, it means you have a lot of sellers. On the opposite side of that coin, okay, if you see, okay, if you see low volume bars, okay, and very weak technicals and weak delta form topping tails, that'll usually represent lack of buyer interest, okay? And you might say to yourself, self, who cares? Price is not going higher. Why does that matter? Anybody? Why does that matter? Why does it matter whether you have a whole lot of sellers taking initiative, okay, to drive price lower versus, lack of, maybe the buyers have run out of steam for the day? Why does that matter? High delta equals absorption, correct? Oscillator divergence. The reason it matters, guys, is because the market trades in sequences, okay? Day one may have gotten you here, okay? If you don't have an army of sellers defending this level, it's very likely that in days 2 and 3, you're going to get continuation higher, okay? So you need to read the tea leaves, or in this case, read the tape, okay? And watch how the market is reacting to these levels. Why are you getting these topping tails? Matters. Does this make sense? Because once you come into day 2 or 3 refreshed, okay, and buyers, potential buyers come in and see this beautiful bull flag, that had a beautiful opening range drive and flagged, okay, what are they going to be looking for in days 2 and 3? Well, they're going to be alerted to the fact that this is a massive potential breakout, okay, and if there isn't a wall of sellers there, and you have a whole new generation of late money or intermediate money longs, looking to take this higher, they're going to be running into a much easier monkey knife fight than if you had an army of people selling here, right? Tesla, the corner of, oh my God, what have I done? And 260, 250 took a lot of lives this year, okay? The corner of, I'm an idiot, and 245 also destroyed people. You had active sellers there mashing Tesla lower, okay? 218, 222. Those were levels where you had active, okay, proactive buying, okay? They were defending those levels to the death, okay? Understanding whether you're dealing with a reaction or initiative and how that volume profile reacts to that initiative is essential to map out your operational plan for continuation, okay? Because what does the auction do if buyers say F this, there's nowhere we're going to get through here? What are we going to do? There's one word. We're going to rotate. We're going to rotate back to levels of fair value for buyers where they're going to be more interested in buying. If you look at a chart of Tesla for the last month, you see that picture played out very clearly. Okay? Why were we excited about, what was I so excited about trading Tesla on Friday? It's because this is what was playing out, okay? We had a very strong bullish initiative, and then I saw 2 days of value being defended, okay? I saw a reaccumulation and compression, all right? And I saw that 260, 250 level as a major inflection point of imbalance, and I said, I'm hopping on this train, okay? Is this picture starting to come together? The things I like about doing classes with you guys is it's a weekend and we get to talk about these things, you know? It's nice. All right. Okay, so hang narrow. Does this make sense now? You want highly positive deltas, and you want to see absorption. If you have a strong positive delta, and you end up with price volume divergence, regardless, it's a warning sign, Lance. Do you understand what I'm saying? If you're like, if in the SPOOs, I'm going to use the SPOOs as an example. If I see, 1,000, 2,000, 1,500, and I get topping tail after topping tail after topping tail, okay, and it starts to form upper end points of control in each of those 5-minute bars, I know there's big trouble in Little China. I'm not going to chase that till I get a Jack and Buick. Does that make sense, bro? Can I call you bro, Lance? Just making sure. All right. Next one. I figured. All right. The polarity shift rule. Okay. All right then. Why are there two different fonts there? I committed a font mistake. I apologize. All right. So when value area is broken and begins to act as support, you will typically see value area high move higher as the cumulative volume continues to build value higher. For example, when a B-shaped profile bounces from the bottom and fills in near point of control on the way up, it generates transformation from B shape to D shape. Okay, so there's a lot there. In order deltas or volume delta, are we? In this case, I'm talking about order flow delta, volume delta, Ash. I'm talking about volume delta. Okay. So I'll repeat. When value area is broken and begins to act as support, okay, so let me draw this out for you guys. Again, we're drawing stuff out on the fly. I thought this would be easier for everyone involved, especially me. Okay, so you have an opening drive, okay? That down or up, all these things are work in both directions, obviously, okay? So when value area is broken and begins to act as support, okay, so when the value, so top green line is value area high, and starts to access support, you will typically see value area high move higher as accumulated volume continues to build higher. Right? Does this make sense? So one of the things you don't want to see in your profile, typically, okay, so in the beginning of the day into here, okay, this is what your profile looks like, okay? And then typically on this breakout, you'll have some volume here, okay, but not a lot. On this pullback, okay, you want to see this turn into a bigger P. Does this make sense? You want this filled out, okay? So I mean, this is just what I said. When a B-shaped profile bounces from the bottom and fills in near POC on the way up, it generates a, yeah. So it's actually a different scenario, but this is what creates a polarity shift, right? The point of control polarity shift is in my opinion the most impressive one, especially if you have a high point of control. So oftentimes you'll have two legs higher, and everyone thinks the particular issue at stake is done for the day. It happened several times on Tesla this Friday, right? And when in reality you're doing a two-wave corrective and building a falling wedge, snapback right into point of control. This move is powerful, okay? But what do you need here? You need an extremely high volume node point of control, okay? You need strong technicals and strong order flow to confirm the move. But this happens oftentimes. The shorts here that are, shorting what they consider to be a ledge here, which is really the D leg of the two-wave corrective, right? They're building a short position, looking for full rotation to value area low here. And what happens? Again, just like the monkey knife fight effect, because you built such a strong initial high volume node in the profile, you will spike higher. And these kinds of actions in the daily profile sufficient, or do you zoom in to the price action right near where the transition happens? They're both super important. We're going to get into the 3-day rule, John. When I'm looking at sequences, I will always look at the distribution tops and the accumulation bottoms. They give you amazing levels in the profile, okay? And then intraday, in terms of reading the tape intraday, seeing how that value is built and determining whether you're going to full rotation or you're just rejecting. This is a rejection of a rotation, right? Full rotation, like 80% of the time, John, okay? Price should come in here. I'm going to give you the bear case in pink, okay? Price should come in here, fail the breakout, and revisit value area low, right? Okay? The shorts commit to that rotation. In fact, the POC polarity shift, what it does is give you confirmation that the operational roadmap is higher, because let me make this yellow, okay? They're holding point of control, okay? Context structure roadmap is still bullish. New buyers come in and challenge day highs, and the trend continues higher, okay? So that's why this pattern is so incredibly powerful, because what it is really a failed rotation from the shorts. We're expecting a failed breakout. They're expecting the dead whale. Lance, help me out here. The whale, Moby Dick something or other. The whale complete, yeah. Okay, and instead, okay, they're getting kicked in the face by late money longs coming in here, okay, buying the high volume node. The high volume node now acts as support. The rotation fails, and the trend continues higher. Okay, super important. I'm gonna clean this up in the final slides, okay, and add a second slide to this one. This is a really important context. The context for you guys to think about. Most of the time, what should happen when a move is complete is a retest of value area low, right? The failure of the breakout, at least in the short term, is that rotation to value area low. And if it can hold it, then it builds a new cause and then tries to take this out. The fact that you have a high point of control in your value area that holds attracts a lot of buyers and creates this polarity shift. This we see like over and over again, and we often see it across multiple days, where the prior high volume nodes on a certain day will act as support. Okay, especially in the prior case we were talking about, where you have an initial day one P-shaped profile, and days 2 and 3 are consolidations, and they're coming right into that either day one value area high or day 2, or day one value area high or day 1 point of control if it's a high point of control. Does everyone understand so far? Am I going too fast? Okay, all right. All right, let's see here. Next one, what do we got? Okay. The D-shaped recovery roll. Rotation to prior day's point of control, especially after a low volume two-wave corrective, generates a strong buying. Okay. Strong buying if context structured roadmap is in a cumulative uptrend, aka a markup. Okay. So oftentimes, okay, you'll be in an uptrend. Okay, so you'll have an igniting day that's could be P-shaped, could be B-shaped. Okay, maybe they had a rough time getting started, but it finishes as a B-shape with a high point of control. Okay, so the rotation into the prior day's point of control after a two-wave corrective, okay, will sometimes generate an accumulative uptrend, because it's what's happening here. Sometimes you gap up higher, right, and you're in an overbought condition. You gap up higher in an overbought condition, and buyers are looking at fair value, and the only fair value they'll usually find is the highest volume node, because they're looking for areas of high liquidity to transact in. Okay, so oftentimes this is very common with Tesla, for example. It'll have like a really, really strong day, and then it gaps up something fierce. It'll gap up like 9 points. And what are we waiting for? What do I always tell you guys? What are we waiting for on a really bullish day? I'm usually waiting for that closing pivot, which is close to that high volume node transactionally, okay? Because when Tesla's really strong, its point of control in high volume, in high value area high, is usually right at the closing pivot. And I'm looking for that climactic selling candle to catch the V. I mean, we've caught this trade a million times in the room, okay, over and over again. That's what I'm looking at when I'm buying that closing pivot break, especially if you got that 5-minute 21 or 2-minute 200, and it shakes through that, okay, and rejects with a lot of power. I mean, this V is, presto. You know what I'm saying? So this is definitely similar to the polarity shift rule, but it's all about rotation. Okay, you got some profit takers here. Okay, and the failed rotation to the prior day's high volume node, the area of high transaction, if it matches a closing pivot, even better, is that confirmation that the CSR is still bullish. Okay. Can you spell that slide out? I'm not sure what you mean, green PJs. Oh, why is this a D-shaped recovery? Because you end up having a strong B shape here, and you end up building a D shape by the end of the day, because you immediately V bottom, transact out, and fill the value. Does that make sense? Sorry, I thought that was obviously not self-explanatory. I don't get out much. Does that make sense now? Thank you for asking, Green PJs. Thank you for the B becomes a D. Yes, it's highly bullish. This is a very strong long setup. It's also a very strong bearish setup if you invert it. Every phenomenon and rule I'm talking about works just as well to the short side as the long side. Okay. All right. Okay. Let's see. What do we got next? All right. So the late morning two-wave corrected value area high failure rule. So when this occurs, the prior day POC or lower B high volume node target is your target. Sorry. So you had one April 7th to April 9th on Tesla. So you have a late morning two-wave corrective. So, lower that fails the value area high. Let me make these thinner. This is like grotesque how thick these lines are. Okay, so okay, so oftentimes, and we have a lot of chart examples, guys. So don't fret about that. Okay, so oftentimes Tesla will be in a bull run. Okay, and Elon, everyone's hot to trot. They gap it higher, either a lot or a little. It doesn't really matter so much. Okay, this is a failed rotation type of trade. Okay, so you have value area high, value area low are in pink. Okay, I'm gonna make point of control green here for everybody to see. Okay, so and the blue line is the pivot high. I'm going to get rid of this one because it's just confusing. All right, so everyone's expecting continuation. Okay, so you have a two-wave corrective failure. So remember we talked about the different types of rotations earlier when we were talking about auction market theory. So you'll gap up here, okay, and you'll get that two-wave corrective to value area high, and it doesn't hold, and it rotates back into a value area high. Now, guys, what happens 80% of the time when you fail to hold a new value area and you can't hold the prior value area high? What happens 80% of the time? Be a little bit more specific, Andrew. This is a rule of, yes, you rotate to value area low. Okay. Typically how this happens is you bounce value area high and then you don't have enough oomph to have a polarity shift here. And then you have a two-wave corrective and you end up traversing all the way back to value area low. This is very common with Tesla, especially when it breaks value area low and fails to get above it. This short in Tesla is brutal. And I believe we have several examples here. Okay. So the late morning two-wave corrected value area high failure is a bear of a short, because what happens is you're either gapping up or breaking out on maybe like a day 5, day 6. You need to watch how overbought the market is. Okay, you need to. There's a lot of technicals you need to look at, but when you fail to hold above this value area on a stock that's been trending higher, these green lines are points of control, and you've got stacked points of control. Okay, so you're finding higher and higher transactional value, and all of a sudden, instead of doing this, you rotate back into value area high. The chances of a full rotation to value area low are extremely high. Okay, and then that short gets really good when you fail value area low. Boom. Okay, this rule works really well. Okay. Once the two-wave corrective above value area high fails, I'm always looking as a rule for full rotation to value area low. Yeah, buying after day 4 is usually, it's a little dangerous. Okay. So this, in part, Green PJs is helping spell out why that is. Okay. So, when you have buyer exhaustion, you tend to rotate to lower areas of value to see if you can attract more buyers to come in at prior points of fair value because the buyers are exhausted. Make sense? That's what's happening in the market. I don't want you guys to stick to, no buying after day 3 type of rules blindly. I want you to understand why the market does what it does, because then you can make really good informed decisions for yourselves as to what you want to do and why. Is that clicking? Make sense? By the way, Lance, I forgot to tell you the drinking game rules for today. Every time I say make sense, you're supposed to have a shot of tequila. So just FYI. All right. Initial balance, value area, high failure. Okay. Cheers, Sandoval. So when initial balance fails to hold value, the auction will quickly move toward prior area of liquidity. So notice I didn't say value area high. Oftentimes you have multiple areas of liquidity. This happened in Tesla April 10th, for example. Common also with bull flags, filling value area highs and causing liquidation breaks after high volume node is created early that fails to hold. This one is pretty self-explanatory. You've got that 9:30 to 10:30 period where the bulls are taking initiative to, the bulls are taking initiative here to hopefully have a trending day, drive price higher. This is 9:30. Okay. This is 10:30. Okay. Oftentimes you'll build a value area high here. That failure to hold polarity shift at value area high at 10:30 will often be the beginning of a nasty liquidation break if you're in a very tight, high volume, highly transactional accumulation range, and will typically trigger a full rotation. And oftentimes, when Tesla is really toppy, it'll trigger a full reversal on the daily, and you'll end up getting like a piercing or an engulfing reversal on the daily near the highs, which happened in Tesla at like 469 or something. If you look at the chart, okay. You passed out. Did you have a good nap? Good. I recommend good naps. They're life changer. I usually take one when Jerome Powell goes on the mic. It's Monica takes over with a voice recoder. All right. Okay, so that's the initial balance value area high failure. At 10:30, if the bulls can't hold value area high, usually that dream of a trending day is smashed to 1 million pieces. That's the main idea here. Okay. What is it that makes the first 60 minutes the one to watch and not the rest of the day session? So your market opening imbalances, okay, are usually fulfilled in the first 12 5-minute candles, right? If you have an opening imbalance that you need to fulfill, say you have you're a buy side trader and you've got a customer. Obviously, if you've got to buy $100 million worth of Apple stock, you're not going to get it done in the first hour, okay? But oftentimes those opening imbalances are fulfilled in the first 60 minutes, and then the question is, okay, And there's do you have enough of an imbalance after the initial balance to help the cause of the bulls trend higher, or are they going to run out of steam? Okay, yes, way institutional flow, or are they going to run out of steam, and are you going to get a rotation back to lower levels? Okay, so when the initial balance fails to hold value, the auction will quickly move toward a prior area of liquidity. Okay, a lot of times that prior area of liquidity is a prior day's point of control or a high volume node in the middle of the opening range drive that could be value area low, or it could be beneath value area low. Okay, that's where moving averages in conjunction with multi-day VWAP and volume profile become essential. Okay, does this one make sense? You know, oftentimes, I'll deal with a lot of struggling traders, and I'll tell them, like, I want you to split the day up into 3 categories. I want you to look at the first 15 minutes, and a lot of people they blow their wad in the first 15 minutes. They have a deep red day because they're not good at reading that initial 15 minutes too fast. And then I tell them, look, like, start trading either after the first 15 or the first 30 minutes. And some people, I put them to work after the initial balance, and they flourish as traders. They start executing after 10:30, and it changes their life. You have to experiment and see what kind of trader you are. You know what I mean? It often takes that form, Lance. They're not for everybody. Aura Bs tend to work really well when you have a combination of high opening and high opening imbalances in terms of the market on open, a strong catalyst, high relative volume, and location in the chart. You know, like you know what I mean. So it just really depends. All right, the gap fill rule. Let's see how many more we got here. Yeah, 6 or 7 left. Okay. Are you guys still doing okay? We're probably going to take a break after we go through the 21 Shaolin rules of order flow of volume profile. Okay. All right. Gap fill rule. If value builds at a high volume node at either end of the range and fails, the volume gap will be filled below or above. 2 things happen usually: price traverses and the volume gap violently to next area of interest, value, or wicks are formed, confirming confirmation of the trend. So what does this mean? Okay, so oftentimes, say it's after 10:30. Okay, you had a nice opening drive, and you have a base breakout. Okay, you didn't really transact a lot in this base breakout at all. Okay, and then you have a secondary breakout here on really, really, really low volume. Okay, so this is low volume. For whatever reason, you just had maybe there wasn't a whole lot of sellers here. You broke out violently, and you have a really light profile here. Okay, oftentimes, say point of control on the day is here. Okay, you're going to see a violent move to fill this volume gap. So what does this look like on the profile? So this is a price action, okay? This is what the profile looks like, okay? So you built a lot of value here, okay? And then we said this is like a shallower consolidation where you didn't have a whole lot of transactional interest, okay, and then not a whole lot of not a whole lot of sellers up here, and therefore price just erupted. This especially happens when either through news flow or just technical breakout of a key area, you'll just float up higher. Not enough sellers interested in transacting here, and you'll fill out a really shallow profile. Okay, when this cracks, okay, you're going to fill those volume gaps really quickly. Now, the reason I created two here is oftentimes in that, this is itself a volume gap, but there's a volume gap between these two shallower profiles. Oftentimes, because of the nature of volume gaps, okay, you'll actually, instead of putting in this entire move to the high transactional area of interest, which is here, you'll flush through that volume gap and then put in a bottoming tail and bounce right back, because people are just not interested in transactioning through here. So you'll fill the gap and bounce right back. Okay, that's the curiosity of volume gaps. They're places where people are not interested in transacting. So you'll either flush right through, or you'll look like you're washing out and then form a giant sort of bottoming candle through it, and then begin to bounce and begin to build volume here. That's oftentimes how V bottoms with platforms are created. Okay, and then slowly but surely you'll see this profile build strongly here, and you'll get an uppercase B profile. Okay, and you'll see point of control start to shift to the upper end of the range. Okay, and that's how okay, maybe you have a really good overnight here, maybe you have a secondary breakout, etc., etc. So that gap fill can take really two different forms. It can reject the gap fill, touch it, reject, and go higher and form a reaccumulative structure, or it can go right to the source of the party into the high volume nodes. It's a quick decision one way or the other. And a lot of people have a tough time with that paradox. You need to think of it as lack of interest. Lack of interest can mean through, okay, or it can mean bounce. It's kind of weird how that works. That's why a lot of liquidation breaks bounce right back, right? Because they're breaking into areas of low liquidity, and instead of going to the high liquidity zone beneath, they'll bounce right back and go to where the most recent liquidity was, which was near the flag. You got it, Wade. Have a great one. All right, so that's the gap fill rule. This is the 3-day rotation rule. This also tends to work in multiple volume profiles. So, for example, just to give you guys an example, right? You have a value area here. Okay, you have a markup. When you experience a markdown after day 2, okay, so this is very typical of this market, where we're like, yay, bullish here, and then we either find this is also very common in bear markets, right? In bear markets, you see the 3-day rotation rule all the time, because you have these violent short covering rallies. They hit a 21, right, or a 50 or whatever it is, a major moving average, and then you also hit an anchored VWAP. So anchored VWAP is in red, right? And buyers are just unable to sustain the auction at these levels, okay? And you experience a rotation lower, right? that rotation lower usually retraces day one's point of control. You will be shocked. I want you guys in your spare time, if you have nothing better to do, okay, in your spare time, to see how many of these failed day twos will retrace day one's point of control. Right, the market looking for liquidity. Okay, the market is like Pac-Man. Okay, what it looks for most of all is fair value and liquidity. Having failed the markup here and going into a distribution cycle, it'll look to find the highest source of liquidity on day three. Okay, this works just as well when you have big value areas. Okay, I'm going off the page here, so let me redo this. I absolutely suck at drawing things. I apologize. I apologize on behalf of people who actually can draw. This is embarrassing. Okay. Sometimes this works just as well. Okay, when you have big value areas. Okay, and you have a markup off of an accumulation zone. Okay, and you experience a distributive upthrust, a sign of weakness, and an LPSY. Okay, that's usually going to go right back to that highest volume node in the prior accumulation. Okay, the market, remember how we talked about rotation and how the market tends to rotate to fair value? Okay, well, it's going to rotate to that highest volume node in the prior cumulative structure. Okay, and when it does this and fails that prior value area low, then you really get a mountain of sellers, because these people who came in as late money longs looking to buy this dip here, thinking this fair value was going to hold and perhaps basing it and go, and look at this as a retest, they get trapped here, and then it's down goes Frazier. Okay. So obviously, I mean, this could be a week long. It depends. I like to call this a 3-day rotation rule. Okay. Because it works really well day 1, 2, and 3, especially in this kind of bear market we're in. But sometimes it's 3 or 4 days for each volume profile. Make sense, Sundo? Okay. All right. Okay. So this is the base defense rule, which we've been touching on already. Okay. This, as a swing trader, this one is essential to success. Okay. So you have a day where you do this sort of thing. Okay. And you build a beautiful P-shaped profile Hugh Hefner would be proud of. Okay. Okay. This one's brought to you by Cialis. All right. And then this is day 1, right? And days 2 and 3, okay, you fail to rotate below day 1 value area. Okay, you fail to rotate below this area. This is why multi-day, when you couple multi-day profiles, okay, and you couple those with anchored VWAP, you get such astounding results. Anchored VWAP will typically, when you see anchored VWAP here conflating with day 1 value area low, okay, a lot of you guys like to buy the dip. Okay, that's the ham sandwich you want, guys. Okay, all day. You see what I'm saying? Now you want to see full rotation in days 2 and 3. You don't want to see this kind of monkey business. All right, this is no good. Okay, you want to see full symmetrical rotation. Okay, you want to see balance in this range because you're in a reaccumulative context with a strong bullish roadmap. Okay, but when you couple that day 1 value area low, given a P-shaped profile with a high degree of transactional interest up high, right? Day 1 has to be a very strong P-shaped profile with a very high point of control relative to value area high. When you see days 2 hold anchored VWAP and that value area low with a great deal of symmetry in the rotation, okay? So 3 things have to happen, okay? Strong P-shaped profile with a high point of control relative to value area high, okay? Days 2 and 3 need to hold that value area low and anchored VWAP in a symmetrical rotating fashion, okay? You can't have like stuff like this, okay? This is no good. Yes, I'm anchoring VWAP on Monday. Typically, I'll anchor like 3 or 3:30, and I'll anchor the beginning of the day. Okay. Yes, naturally, Todd, given this kind of traversal, you're going to get D and D. There's nothing wrong, okay, with getting balanced profiles on day 2 and 3, okay, if you're looking at the defense of the base. Make sense? All right. Are you guys starting to feel overloaded? We got 1, 2, 3, 4, 5, 6, 7 more rules. You guys want to stop here, or do you want to just get through the rules? Hit me, sis. You said you will use anchor VWAP around market open, and yes, I will. I like to anchor the power hour and the open. I get a really reliable set of bands. You guys want to take a 5-minute break? Okay. All right. Let's take 5, and then we'll go through the rest of these rules. Okay. And a lot of these may seem totally intuitive, or like may seem obvious, but if you actually look at your trading, I think you'll see that a lot of you guys are not following these rules. You know, not in real time. Yeah. All right, Wilson Chaser. Let's take 5. We'll be back in 5. Good stuff, guys. Am I pausing? Am I stopping the recording again? Monica? All right, we'll do. Okay, we'll be back in 5 minutes, guys.